Hey man, I'm back on. I really need to get a haircut here, but I'm back on this new market update. Today is the 6th of April, on Monday, actually Easter. Market's closed. We can see that market is closed for Europe. Obviously, CME is opened, but it's a long weekend for part of the countries. I wanted to comment on the price action here. Um, the challenge is standing at 192, down from is it 218 or 220? So we did take a bit of loss here, and want to explain how I want to essentially manage the trade. It was unfortunate because so the way I manage the 100K to a million challenge is the way I manage my book as well. So the loss I'm taking on the challenge is directly the loss I'm taking. I mean, there are few variations, but I did lose money today, um, and I want to make sure I just get the same experiences as the challenge overall. On how I manage this, I think on last stream I did mention that if we were to reclaim this level, that's uh, that's obviously a positive, because that's the price at which Trump gave the speech, and the speech was, I would say, net bearish for the market overall, and people were expecting the escalation, and in fact, everything just escalated, and to me, reclaiming this means that the market is basically okay with Iran. Well, sorry, Iran or Iran, I'm not sure. Um, I think just a few key things on when everything I say has to be nuanced because it depends on how the move happens. And one thing that's worth mentioning is the level that we are at today, which is this 69,500, which coincides with the 4-hour, 200-day moving average, which is historically a good EMA to look at for BTC, but also just other assets. If we look at Tau, for example, once it crossed this moving average, just went on a good run, and it usually works in a bull market. The reason it works well is because it's got a lot of confluence, and a lot of traders are using this. And crypto in itself is a very small market, so those simple things do work. This level is important not because just of that EMA, but also of one thing which is called the gamma flip. So the gamma, when and on Telegram, sometimes I mention that the dealers, so the market makers, are long gamma or short gamma. You have to understand, and that's obviously relevant to the options market. I'm not going to go into the. I'm not going to do a class on options here. I could, I think, maybe one day I'll look in and do a course on everything I've learned in crypto. But not now. Just don't have the time. Long gamma is when dealers are absorbing the flows. So, I mean, first, why there is gamma is because the dealers have to be hedged whenever they sell options, and the gamma is telling you how they will hedge, so how they behave as per the market. And 69,500 is exactly that gamma flip, and that means roughly above or below the behavior of the dealers are going to change, and IBITs, which is the BlackRock's ETF, like the options contract on IBITs, are the most traded out of their bits and the other options marketplaces. And when you're so basically above 69,500, dealers will be long gamma, which means that they will absorb the price on the way up. So when it dips, they will buy, and when it rips, they'll sell. But when you're short gamma, so when you're short from here, short gamma from 69 500, they go with the flows of the market. So if the market sells, they sell too, and if it's basically just amplifies the move. And here it's just a very interesting place in the market, because, and I want to see, like, the way I function is that I want to see more validation that the price is like willing to accept this level, because here the context is key. Like, this move happened. The move that we saw was basically perps driven. So it was perps driven, and obviously fueled by a lot of shorts being liquidated on the way up, and then spot came in just after. So that's the type of moves that when you hit resistance, just like we have now on the 4-hour 200, and when you have this gamma flip, plus when you're doing this move on a very illiquid day, then you have a lot of potential for a mean reversion. So because that move happened 30 minutes before the CME gap, well, the CME open, sorry, you do have this gap, which I don't trade. I just don't think this is so valuable. But my mindset now is you want to cut short exposure if price sticks above that key level of 69 500, and then eventually on low time frame chase along from that level all the way up to 72, 74, 75. Although I'm not very positive about the market, I have to go with the flow. And if the market's telling me it's bullish, I have to agree with it. So I'll have to cover the short exposure that we have on the challenge on both BTC and Hype if we close successfully here. And I'm the type of trader that's going to give it some time. You can get hunted really quickly, really fast in this market. We have to be mindful that this is a bear market. So the high time frame trend is with us, or like with my positioning. So I really have to see a good, convincing move for me to flip. A couple of things that you want to look at is STRC and the flows that this will bring to the table. So here, for example, market is closed here, but STRC as a product is trading above 100, which is exactly where they can do some ATM. So sell some of these products to directly tap into BTC. And the deadline is coming up fairly quickly. Like the snapshot is in about, I think, is it 5 days? And we're directly in that view up pressure. Like some have asked me in DM, like, if you knew all of that, why didn't you cover short exposure? To me, it was, I remain of the belief that the trend is down on high time frame, and the expected value for short is by default better than long, and that the invalidation was pretty clear. I think the execution here was a bit messy because that move was super sharp and happened when I was asleep. So just woke up and was like, okay, now I just basically have to wait. I would say you should not here, if you want to take a long, you obviously have you have some good setups because of the strong invalidation that you have around it. This basically take the inverse of me. Wait, sorry, that's a short. If the price fails to stick above 69 500, you can like it's a very good invalidation for you, and the for your target, I think you can aim for 72, 70, even 75. And me, I do the exact opposite. Maybe I flip long to potentially hedge like the hype short. I'm not exactly sure at the moment. Um, what's going to be key for now is to look at the market open tomorrow and see how the market reacts. I would say there is a pretty large odd of what we call a BART, but just the price reverting, just by the nature of how the move happens. It's not as a bull, the way it happens exactly 30 minutes before the open on very liquid markets. Spot perp driven is not really what you want to see. Like I've seen those moves retrace so frequently. So at the moment, I'm looking for shorts, and the invalidation that I take is the exact same on BTC. Crypto is still a market where you have to take BTC as your leading indicator. So, for example, I took on a month short, which is currently underwater. But my invalidation for it is twofold. One is you have this key level of 3 cents, which is a round number. I don't expect this level to be breached on one go, but I'll act with the BTC price action and act accordingly. I just do think that whenever you have these moves, it's higher EV to target ads, ad shorts, and not just go with. You can go with a BTC short, but usually you have some. If you were to, let's say, reverse the move on tomorrow, your like ads obviously present a bit more beta to the market. And here just and this is a low time frame trade. I don't take so many of these trades, but it provides just a good invalidation here. Like I don't, if the price goes above 0.03, I'm just not going to stay around. And I'm comfortable taking this opportunity because the BTC is also such at a key level. And obviously, I'll have to cover the short if the market's just moving against me. And the way I'm going to execute this is maybe add some longs and maybe not cover the shorts. So do just pair trades and not not the opposite. One thing that the reason why I don't want to flip long so much is because what we did highlight a few videos ago now is I just generally find that the market is very complacent. Well, both the BTC, crypto market and the equity market. What's hard is I don't have an edge in this market, but when I see that oil is still pretty high, at 110, and when I see that the S&P is not moving much, to me, I just don't. And plus, like when you understand the economic effects that this has on inflation expectations and as such, like interest rate expectations and Fed policies and other central banks, it's just hard to go super long. But and what I'm saying is again super nuanced, but it's typically so I wouldn't be surprised to see a rally, which is why I want to have a tight invalidation here on BTC, because it's typically how the best rallies happen is when no one's expecting them, and you don't want to be. I wouldn't be surprised to see here a big rally, maybe to even the 80s, because that's how, if some people are in disbelief and just keep shorting, just like I do here, then you have a lot of fuel for higher. Because your marginal buyer, you have to think of it as always being shorts and not longs. I always laugh when I see someone, like a maxi of a coin, say, like, hate people that short, but in fact they're the ones that will buy your coins next. And shorts is a great fuel for higher, and that's also why you want to monitor. Here you want to monitor the substance of the open interest. So, and you want to see how spot is doing, plus the funding rates. If funding rates turn negative, that would be a really bad sign for bears, that you have to get out. Because if short starts piling in here, that's just additional fuel for essentially the same move, but all the way up to 72 and 75. Anyway, that's a bit of what went into my mind, when I look at the market, today. And I think I see you, if not tomorrow, the day after.